Hey there, students. So welcome to the depreciation mini course. Now in today's video, I'm just going to go over what is depreciation, go through a few different aspects of it so you can understand on a clear level like what this actually is. Because some students I've taught don't always know what depreciation is. They may know how to calculate it, but like what is it? So I'm just going to jump right in. Make sure I got the right pen here. Let's make that. Okay. So depreciation. Well, first off, what do you think of when you think of depreciation? Some students think of decline in value, which is kind of true. But the better word for it is this: cost allocation. So when you buy a fixed asset, right, it's a cost up front, a big cost. Say you buy a piece of equipment. That's a lot of money up front. Now that cost, though, is not an expense. It doesn't go against your income. You actually, what they call, capitalize it. You take that equipment and you put it on your balance sheet. Now it's an asset, not a cost. But what depreciation is it takes that cost, and then over time, it's going to divvy up a piece of that cost to each year. So let's say the first year, let's say you buy some equipment, and I'll just write this for you. So equipment, it's worth $500,000. And the rule is that over 10 years, it will depreciate. But what you're doing is you're just taking a piece of this 500,000 and you're just spreading it out over each year. And imagine this is each year, right? Let's just say this is year 1, and this is 2, and this is 3, etc. You're just dividing that cost up and you're spreading it out over years and expensing it over time. So that's what it is. It's kind of like it's basically expensing a asset a little bit at a time. So that's basically it. You're expensing that asset a little bit over time. As opposed to expensing it all up front, you just expense it over each year or over each month. That's what depreciation is. It's cost allocation. It's less about a decline in value, but more about allocating that cost or spreading that cost over time. So that's what depreciation is in a nutshell. Let's go over what is salvage value. So I'm going to move down here. Okay, so let's talk about salvage value. Now, what is salvage value? So when you think of salvage value, I want you to think of trading in your car. So when you trade in your car, let's say that you drive it for a long time, and then you're like, I need to go ahead and trade this in and get a new car. Maybe there's just a lot of problems with the old one. When you trade it in to, let's just call it a junkyard, and they give you some cash for what that car is still worth. It's not worth a lot. It's at the end of its life, but you still get some money back. So in other words, that business that you gave it to, that junkyard, they can salvage it. That's what the word is. So salvage means like recover. So they know like they get the value from you and they know they can recover it later. Maybe turn it into a new car, put some extra parts on it, replace the engine, right? They can recover it. So it's called a salvage value because you can throw it to them and they'll give you a little bit of money in return. It's what you can trade it in for. That's what salvage value means in accounting. So if someone buys a piece of equipment and they have a salvage value or a residual value, that's another name for it here, is residual value. Then they can take that, it's what the car is worth basically at the end of its life. That's what they call it in accounting as well for equipment, for buildings, whatever that building is worth at the end of its life. And in calculations, most of the time, you deduct that value from the cost. There are some exceptions, and we'll go over that. But that's salvage value in a nutshell. So that's about it for like what is depreciation overall. I don't need to go too far into it. There are some different methods that we're going to talk about in the next video. But just to take away from this video, depreciation is cost allocation, and you allocate that cost over time as you use the asset. Salvage value is kind of like your trade-in value, like you would trade in a car, and what that asset is worth at the end of its life. So that's about it here. Thanks for watching. I'll see you in the next video.